Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend Dan Bird. And Dan, I wanted to ask you a question. You're always great at playing devil's advocate, pointing at things that I may not appreciate. So you ready for this one?
I don't know.
That's an honest answer for you. So here it is. I have long believed that the bond market is where the smart money is, and the stock market is where the dumb money is, just generically speaking. Stock market is where retail investors are. It's where I made hay and ultimately lost. The bond market is much deeper, much bigger, and it's where the smart money lives. I believe that the bond market is clearly saying, I think the Fed's going to be aggressive. The stock market is saying, bananas, they're going to bail us out. Don't bet against the Fed. The Fed put is real. And I haven't seen in quite a while the bond market and the stock market disagree like it does right now. What do you think of that?
I think that's interesting. I do agree that the bond market is usually smarter than the stock market.
Okay.
Especially since COVID, when lots of people were sitting at home with nothing to do and signing up on Robinhood.
Trading options.
Trading away, and nothing. There was nothing they could get wrong because the market only went up.
Yeah.
So everybody looked like geniuses.
Mm-hmm.
But in general, I agree that the bond market typically is smarter than the stock market.
Okay. Yeah. And again, the stock market's very emotional. At least it was for me. And that's why I didn't touch it for 15 years.
So let me understand what you're saying.
Sure.
You're saying if the bond market thinks that the Fed is going to stay aggressive, then the bond market, bonds will go down, deals will go up.
Correct.
Right?
Correct.
So let's just look out of curiosity. I wasn't prepared for this, but I do have a bond market chart. And there it is.
Look at that.
And the 8-day cross the 21-day back here in the beginning or end of December. So the bond market has been saying that for 4 months now.
And again, just so people realize what they're looking at, basically what this chart validates my thesis. Correct?
Yes.
Okay.
Not only validates your thesis, but it is actually accelerating.
That's what I was just going to say. It has gotten religion, if you will, or faith that, the Fed's going to go and it's going to go hard. And more importantly, the Fed's going to go harder than really what I believe the bond market is saying is the Fed's going to go harder than the stock market expects. The stock market's not expecting it, but it will eventually. And then they're going to come running. So the bond market is preparing in advance, hence the acceleration here recently.
Yeah. There's nothing I would like better than to see the stock market sell off with huge volume.
Now, just so we get a scale, huge to you on a downside is 10%, 20, 30.
Well, I've been saying for a while, this is the S&P and it's just back to the reversion to the mean right now. I had been saying 3,750, 3,800 on the S&P.
All right. So
right now we're at 4,400.
So that's 15%?
600 points. So that's, about 15% more.
Okay.
Downside. That would be technically a bear market for the S&P. The S&P has not been in a bear market. The NASDAQ has. Right. But the S&P has not.
Yeah. So let me just kind of play this out for you. Because again, you're in this world. I am not. You look at this every day. I do not. I think the stock market, in this case, the S&P, I think there's a 30% haircut coming sometime this year. Not that it'll end the year down. I just think there will be a point where the stock market goes, holy crap, we were wrong. Sell. And I think it's coming in the next, I don't know, under 8 weeks. There's this meeting. Yeah. Okay.
That's interesting. I mean, that actually points to something else I put in my newsletter that I want to talk about too.
Okay.
But it could very well be 8 weeks. It could be actually 4 weeks.
Yeah. I meant under 8. So I'm not saying
under 8. Yeah.
Under 8.
So when I said, there's nothing I'd like better than to see the stock market tank big time. I've had people ask me, they said, the market went down, it hit 4,200 a few times. You can see it right here.
Mhm.
And then it bounced back up. They're like, are we done? Is that it? Did we
Yeah.
hit the low?
We're
We
just
going back up now?
validating by the dip. We're just,
Exactly.
that's all we're doing.
And my response to them is, as long as I hear people say, was that the low?
It's not.
Then
the
I
low.
know that it wasn't the low.
Exactly.
What I want to hear people say is, I am done. I have had it with the stock market.
Exactly.
I'm never getting back in again. I lost all my money.
Exactly.
I'm selling everything. And I am never going back to the stock market again. That's
And-
what I want to hear.
And
That's when I know we'll hit a low.
exactly. And I can say that as someone who hit that 15 years ago and didn't touch stocks for over 14 years.
Right.
I know exactly how that, and we're not even close to that. There are so many buy the dippers who have been reinvigorated and by the dip that, become the dip.
Right here in the last 2.5 weeks.
Yeah. It's like, no, see, I'm back. Let's flip flop all around. I'm like, geez, you guys are going to get smoked.
So let's look at, I actually had some treasury charts on here.
Mhm.
So this is sort of in the same topic.
Yep.
About bonds. So on the other side, if bonds are going down, then yields are going up.
Correct.
Right. So this is the 10 and the 2. This is both of them together.
Mm-hmm.
And back over here in just before the COVID crash,
mm-hmm.
when you see that light red part on the top,
mm-hmm.
that's a yield inversion.
Gotcha.
That means the 2 is higher than the 10.
Yep.
All right. And then we went back to something that looked more normal.
Mm-hmm.
And you can see the 2 was way down here and the 10 was up here. And when we first started talking, which was in December,
mm-hmm.
we were right about in this area right here.
Yep.
And the 2 was still pretty far below the 10.
Yeah.
But as I said then, but the 2 is accelerating faster than the 10.
Exactly.
And then we had this little inversion right here
mm-hmm.
until the Fed minutes.
Yep.
When the Fed said, we're going to be more aggressive.
Yep.
And then the 10 started taking off.
Yep.
This is what it looks like with a further far back time frame. So there's an inversion right here before the 2008 recession.
Yeah.
There's an inversion right here before the 2020 COVID crash.
Just another
recession.
Another example of why I always say the bond market is the smart
it's
money.
smarter. It's smarter. They are. And one thing I'll point out here is
mm-hmm.
back here in 2018, there was a little inversion. I don't know if you can barely see it right there.
No, it was. And that's actually one of the reasons I sold some apartment buildings, because I was preparing for a recession.
Yep.
Yep.
There's a little inversion right there.
Mm-hmm.
And a little one right there. We just had a little one right here.
Yeah.
So that doesn't mean
a day and a half.
Yeah, that doesn't mean that it's imminent. That just means we've still got some time.
Mm-hmm.
This is the 10 minus the 2, so a different way of looking at it.
Oh yeah.
And you can see how the yield inversion very quickly bounced back up.
That's the best view.
Right.
I like this view. Right, when it goes negative, yeah, exactly.
That's right. When it goes below 0, then it's an inversion. But it didn't stay there very long, and you can see how much it's bounced back since then.
Yeah.
Now the other thing that you should be interested in,
mm-hmm.
and this is the way that most people talk about inversions: the 10 minus the 2.
Mm-hmm.
These are the charts that they'll show you.
Mm-hmm.
But I think the one that is even more important, especially as it relates to banks and real estate,
mm-hmm.
is the 10 and the 3 month.
Yeah. No, I agree.
So here's
short-term money. Absolutely. Yeah.
Here's the 10 and the 3 month. It is not inverted.
No.
And even with the 10 and the 2 inversion, it did not invert.
No, it did not. Yeah, I agree.
So anyway, on your thesis, I wholeheartedly agree with you.
Oh, cool. I didn't know.
The bond market is smarter,
mm-hmm.
and typically, and it looks like it is confirming that.
Okay.
In my newsletter, because you mentioned the stock market may tank in less than 8 weeks.
Mm-hmm.
I don't know if you saw this part in my newsletter. So I said there are some important events coming during the first week or so of May,
mm-hmm.
in addition to the heart of earnings season, which I think companies will hit their earnings, but they're going to forecast lower.
Yeah.
May 3rd and 4th is the Fed meeting. They'll probably have a 0.5 point raise.
Agreed.
May 4th is the deadline for the extension of the Russia to pay off their default.
Yeah.
Pay or default.
Yeah, they're going to default.
They have 30 days from the deadline, which was April 4th.
Mm-hmm.
May 4th is the deadline.
Agreed.
If they default, that is going to be huge.
Yep.
All right. May 9th is Victory Day in Russia, date that Putin has pinned as a successful completion of the Ukraine war. Ukraine has some impressive wins, so no telling what could happen leading up to this.
Yeah, I didn't know about that one. I hadn't heard that before.
Keep that one in mind, May 9th. If Putin continues to have problems like their destroyer being sunk in the Black Sea, that was huge. I wouldn't be surprised if he tries a nuclear option, a limited local nuclear option. But if he does that, it's going to bring everybody into the war.
Oh, it's world.
Everybody. And then May 11th is the next CPI.
Oh, man. Putin.
All right. So all of this is, 4 to 5 weeks away.
Yeah.
Back to your comment about the market tanking in less than 8 weeks. These could be the catalysts that do it.
Yeah. I had not even thought about May 9th or that. That would be horrible.
They have a huge parade on May 9th. All of their armaments that parade in front of the Kremlin.
This is a yearly thing. I don't know anything about
every year they have on May 9th.
It's like our July 4th or.
Well, it's the day that they defeated Germany in World War II.
Oh, I didn't know that. Okay. All right, cool.
So they have a big parade of all their military in front of the Kremlin. Usually Putin is standing out there. I doubt he's going to be standing out there this year. But he has kind of pinned that date as the day that he wants to have the Ukraine war done.
Over. Okay.
And if it looks like he's still having trouble and problems leading up to that, maybe a week before that.
Okay.
He may do something drastic in order to make sure it's done by May 9th.
Oh, yuck. Well, on that pleasant note, how can people get a part of your newsletter?
Here it is. breakpointtrading@gmail.com. Send me an email and I'll add you to the list.
Yeah, it's usually I read them. It's usually about 10 minutes of reading, maybe 6 minutes. And then there's a bunch of links. I don't check the links out, honestly, all the time, but some of them I do, and they're just crazy valuable. So get it. It's free. If you don't like it anymore, he'll take you off. No big deal.
Yep.
Thanks, buddy. I appreciate it.
You bet. Thank you.